Hello, you're watching World Talks on TVP World. My name is Sascha Fahrbach. On Thursday, the United States announced a 30-day waiver for countries wishing to purchase Russian crude oil and petroleum products subject to sanctions, provided they were loaded onto tankers before March 12th. Now, the move comes as global energy markets remain volatile following U.S.-Israeli strikes on Iran and disruptions in the Strait of Hormuz. Our discussion today examines how these developments are reshaping supply flows, oil pricing, and geopolitical calculations. And we're joined now by Sławomir Raszewski, Senior Oil and Gas Lecturer, University of London. Good to have you back on TVP World. Let's start with the latest. The Strait of Hormuz, it's still closed. We see the attack on certain oil tankers and shipping. If this does continue, how will this impact oil prices in the near term?
Good morning, Sascha. This is uncharted territory. We've never been in this territory before, so it's hard to tell what is going to happen because, indeed, it has never happened. But what we know from the International Energy Agency, if you follow the executive chairman, Dr. Fatih Birol, indeed, he's talking about the biggest crisis ever we have witnessed, which is unfolding. So there is two things we have to focus on here. There is a short-term response to supply of energy security, and there is also the long-term energy security supply. At the moment, what is happening is that with the releases from the strategic oil reserves, countries, institutions such as International Energy Agency, which coordinates energy policies of its members, is trying to address the short-term shortages. But of course, it doesn't mean that this is sufficient enough should this conflict protract and prolong. So what is in the background, which is still big unknown should this conflict continue, is what is going to happen with the long-term energy supply, because obviously the flow rate is here. You know, the oil that is not flowing to the market creates problems down the line.
Mm-hmm. Let's also jump. I want to go back to this waiver released by the United States, this 30-day waiver right now. I mean, we talked and have covered this many times before, how much has been done to actually limit Russia's access to its revenue from oil and gas. Now, apparently, this is now back to being allowed. There are no more legal steps against this. And if we look also, revenue from Russia's oil fossil fuels rose about 13.8 billion in February. If we're looking at China, doubled its Russian oil imports also in February. So what kind of an impact will this have, not just on the global economy, but how much will Russia gain from this waiver, and if this maybe continues down the line?
Well, first of all, this waiver obviously has some strings attached, as you explained. There's a time limitation here, and of course, there is a specific period of time that is mentioned. But what we need to understand is that this indeed is seen by some analysts as a start of fracturing of the sanctions regime, which, by the way, we know that hasn't been very successful, hasn't been very efficient. But what it does, of course, it boosts the Russian economy through exports. It effectively lifts the sanction and legalizes exports. But there is one thing we need to remember. Going forward, the question is how the sanctions regime is going to be navigated through. Does it mean that this is the beginning of lifting altogether? Let's not forget that Russia alone cannot substitute the missing supplies through the Strait of Hormuz. So yes, there is a shift towards Russia at the moment, but Russia alone cannot be in a position to, substitute 20 million barrels of oil. Russia's ability are very limited. It's below 10 million barrels of oil. And indeed, if you look at the export capacity, it's much less than that. Obviously, we don't know exactly the numbers. There's another thing which we've also discussed in the past, meaning all the exports outside of the box. But, what is important from the long-term energy supply is the flow rates and inclusion of those missing 20% out of 100 million barrels of oil that world consumes every day. They need to be back on the market. We don't know exactly when it is going to happen.
Mm-hmm. Also, I want to share a little bit of information. I just checked this. This is about, let's say, 10 o'clock Central European time as we just went on air. Pricing, WTI, per barrel, $96, hovering about that this morning on Friday. Brent crude about $101. Then the statement that we're getting also from Trump administration folks, including the press secretary Levitt, who said that this is all about short-term pain and long-term gain. Now, when you hear something like that, when we see these prices, the disruption continues. How likely are we? Is this heading towards a recession? What do you make of that statement from the White House and seeing prices still rising?
Well, I mean, as I said, short-term, long-term. So the statement probably I didn't see this statement, but I understand that the long-term objective, should this, military incursion be successful, then obviously we're talking about a complete reshaping of the map of oil supply in the world. We've already seen that in Venezuela. Now, should this happen in Iran, that would indeed be the gain for the US and its allies. But it's still unclear, to what extent it is feasible, to what extent it's possible. And also the messages coming from White House are quite mixed, because we have seen sort of statements that were trying to calm the situation. The president of the United States was saying that this is going to take not going to take long, that we're coming to an end. So indeed, the prices have come back to where they were very close to $120, very close to almost all-time high, which we experienced over a decade ago. So the prices have come back to below 100, but you can see the tension. We're not talking about prices coming back to 85, where they used to be prior to intervention in Iran. So there is tension on the market. At the moment, the markets have been calmed by strategic responses, as I said, releasing or now making announcements about the release from strategic oil reserves. And this indeed has served well to keep the prices in this sort of below 100, below 3-digit area. But how long is it going to last? We don't know, because it all depends on the political developments. What is going to be the decision? Does it mean that, it's the end of the conflict? Does it mean that indeed the conflict escalates and perhaps there's going to be some ground invasion? We don't know that exactly.
Mm-hmm. And also, let's talk about the Strait of Hormuz once again. I mean, we really have to tell our audience how narrow this waterway really is. I mean, if we're looking at the shipping lane, I think it's somewhere, correct me if I remember, roughly 8 kilometers wide. It's a very precise sea lane that these tankers have to go in. They're going in a straight line, really close to Iran. Now, President Trump has said, and this is, I think, also coming out to the oil tanker crews, some of them now, their ships on fire, to show some guts. He said he would protect maybe some of these tankers. How realistic is that, and what would that look like? Would that calm the markets at all?
I mean, this statement is, in a sense, politics meeting economics. Yes, I mean, for the politician to say that it is possible, but from the business point of view, businesses want certainty. We have already seen insurance policies doubling, and at the moment, because the transit has almost come to a complete standstill, we see the mounting pressure on the administration to do something about that, because this is likely to have impact on the votes in elections. So I think, and obviously on the prices of at the pump station, which impact the mood of the electorate. So how is it feasible? Well, we have heard the statement from the U.S. military, who sort of implied that their primary objective is military objective, not escorting tankers. But on the other hand, we know that the US's national security strategy is about ensuring energy security everywhere in the world, in particular in the most critical parts of the world, which includes obviously the Strait of Hormuz. So the question is how effectively the political establishment is going to, if you like, operationalize the military to ensure safe passage. We've already know that there have been some passages of those tankers under the flag of friendly nations. Is it going to continue at what rate? We don't know, but we know that the flow rate has pretty much come down to a standstill, and that's the biggest problem. What to do with that?
Yeah, and even if, I mean, we don't see any indication of this ending anytime soon, but let's just, for argument's sake, if it does, let's say, calm down, there is a settlement of some kind, realistically, in terms of production capacity, in terms of actual recovery of this 20% that's gone through that Gulf there and the Strait of Hormuz, how long would that take for production, let's say, to normalize, for normal flows to return, and what that kind of impact would have on the market?
I mean, we can take examples of the situation on the markets post 2022 or how it has unfolded. Obviously, this is a completely different scenario, but we see that it takes a long time. Here, we're talking years to see recovery. If this conflict going to stay like that for another month, some argue, and if it continues as a protracted conflict, then of course, God knows what is going to happen. But let's not forget that it is primarily impacting those that are dependent on the supplies of oil, but also those that are dependent on fertilizer industry, something which we discussed previously. One of the questions which you kindly asked me in the past in this show was, what other industry is going to be affected? Well, there you go, fertilizer industry. I said at the time, and indeed, this is probably the number 2 outside of crude oil and the refined products. And this, of course, has impact on the economy, on transport sector, on aviation, on agriculture, so on food security as well. And we've already seen that, in countries in Asia, in India, introducing some forms of rationing of fuels. So going forward, it's rather bleak scenario for the world. I would say this is going to continue.
So there's, as you said, your words bleak, but we'll have to cover it and see how it develops. Let's stay optimistic. Thanks so much again. Always a pleasure, Sławomir Raszewski there.
Thank you ever so much for having me.
And thank you for watching World Talks, but stay right here on TVP World for more.